Hey folks, Chris here, Green Bar Trading, also known as Ghost of GBT on Reddit. Checking in once again for your weekly charting and technical analysis video. If y'all don't know who I am, I'm a full-time trader, and so once a week I go through and do these threads where we basically have a few people post tickers and a direction that they think that they're going to go, and then others will upvote them or downvote them, and whichever ones end up in the top 10 in terms of upvotes, I'll go through and look at the charts and do some technical analysis. So that's who I am. If you haven't gotten a chance to yet, last week I skipped doing the analysis video because I actually made a different one called Technical Analysis of Stocks. So if you want to know more about my strategy and sort of how I trade, this is a good video that answers a whole bunch of questions that people had posted on Reddit throughout the last couple of weeks. And so I just went through and just answered all the questions and talked about my strategy and how I find ideas and where I set my stop losses and all that kind of stuff. So if you're interested in learning more about how I trade, there's a free video that gives you some more info on it. So I've organized these already by the top, sorted by the top upvotes. So it should hopefully be in order. I'm going to go through the top 10, and then if I have time, we'll go through some of the extras. So number one is going to be AMD long. So, AMD long. AMD looks great. The only problem with AMD right now is that you already missed it. So, you got to wait for it to settle. You can't really buy these things when they're up this much. The breakout was about $8. Let me get rid of that line. The breakout was around $8. So now we're all the way up over $8.50, and really, even $8 was a chase. The real breakout was more down here, like $7.25 or $7.30. And if you were watching it closely, you could have even gotten it lower, around $7. So it's a little extended for me right now, but what I'd want to see is for it to kind of move sideways and just hold above $8. $8.35, I believe, was a big weekly spot for it, if we go back a few years. Yeah, so we had a pretty big weekly spot here around $8.35 right there. And so if we go and use that as sort of the guide, I want to see it hold at least $8, and ideally you want to see it hold 8.30s or so. So that's what I'd be watching for over the next few days. This is going to take some time to consolidate. I mean, this is a big upward move from roughly 650 up to 850. That's a big percentage gain. So there's going to be a lot of profit takers that are going to need to work out over the next few days. So that's what I'm watching for. Love the stock. I love the pattern. Super strong uptrend. It just needs to settle a little bit. Stocks don't just go straight up or straight down. So if you missed it this time around, don't worry about it. You can always grab it on the next bounce. This thing has been trending up since February, so I don't anticipate that it's going to come to a stop anytime soon. I would suspect that it's probably going to retest 8, bounce around for a couple of days, and then probably push back up through 850 and go towards 9 or maybe even 10. So love the stock. Definitely a good idea. Just give it a little bit of time to kind of work out those profit takers, and then we will have the next round. Next up, ATVI long. Activision. If I could type. So Activision is sitting right on the 200-day moving average. So this is a very long uptrend that this thing's in right now. So it's kind of sitting right on its trend, which is good, sort of. It could come down a little bit more on the weekly chart, just looking at this. So maybe down in the 34 range. The one thing it does have going for it right now is this 200-day moving average. However, this is not really strong action. It tried to bounce off the 200-day moving average, had fairly weak volume, and then it comes right back in and gets smacked back down on even bigger volume and closes almost on lows. So I would definitely want to see this bounce off that 200-day moving average a couple of times and prove that it's going to hold it, because right now it just kind of looks like it's going to take out these recent lows and head down towards 35, 34. So I don't personally like this for a long right now, but maybe in like a week or so after we kind of see how it works out, right? If it kind of knifes right through the 200-day moving average and takes out this 37.74 low, then I would say we probably need to wait a little while. But if it can hold this sort of miniature uptrend thing that it has going on and just sort of ride along the 200-day moving average, I think the overall trend is definitely strong enough to support a long thesis. But for right now, it just looks a little bit weak to me. So I would not personally long this right now. Next up, CRM. Okay, so there's obviously some news on this. I'm guessing earnings maybe? Yes, so Salesforce is up sharply after Q3 profit surpassed expectations. So, I mean, earnings is always a good catalyst for a stock like Salesforce. Usually what I like to do is once the stock gaps up like this, it kind of was, it was a little bit weak. It didn't really give a strong indication of more upside potential. Like if you look at NVIDIA, for example, when NVIDIA released earnings, it was nonstop all day. Even though it gapped up a lot, it went $7.50 or $8 higher, closed on its highs. And then over the next couple of days, it only took it a couple of days to really take out those earnings day highs. So this was a really good indication. This earnings day where it closed on highs and it was strong all day was a good indication that NVIDIA was going to continue higher. And that's exactly what it did. And if you follow my newsletter, you would have known that we kind of alerted this on earnings day and said, watch it for the next couple of days because it's most likely going to consolidate sideways for a couple of days and then it's going to take out that 88.77 high and continue a little bit higher. So that's exactly what happened. On CRM, I don't see that, at least not yet. Sometimes what will happen is it's a sell the news type of event. And so when, the earnings come out, it just kind of fades off on the first day and then there'll be a quick reversal the next day. So if on Monday we see this pop back up towards $80 and close strong, then I would say it's got some juice behind it. Other than that, it looks kind of weak right now. So even though it gapped up, it had good earnings. Sometimes these earnings releases they do unexpected things. Like even though they beat earnings, they beat their expectations, the stock still kind of fades away because people were expecting more or something along those lines. So watch it for the next few days. Let's see if it closes stronger up near $80. And if it does, then you might have something. Until then, I'm leaving it alone. So that's 3. Number 4, GSK. So GlaxoSmith. Gonna guess this is probably a no-go. Yeah, I mean, this is... So here's the issue that I have with GlaxoSmithKline. If we look at FinViz, it's got 2.4 billion shares in the float. It's also only 0.35% short interest. So this is a really heavy supply stock, right? This is like a Microsoft where it takes 3 or 4 weeks for it to just move like a couple bucks because there's so much supply. Microsoft, 7.58 billion shares in the float. I talked about this a little bit in the last video that I made about the strategies that I use. And this is one of the things that I always look for is I tend to trade stuff that's like 100 million shares float. So when you have something that's 2.4 billion shares float, yeah, it'll move, but it's going to take forever. And so I personally wouldn't trade this just because I have better things to invest in over, a longer period of time. Right. I'm not a long-term trader, I guess is what I'm saying. And so I wouldn't want to buy this thing and have to sit in it for a couple of months just to make $2 or $3 a share because it's kind of an expensive stock in order to do that. Right. I don't have millions of dollars in the bank. So like I'm going to have to use a good amount of buying power to get enough shares to make it only a couple dollars a share on a $40 stock worth it. Right. You got to hold it for 2 months. Say you want to make $10,000. You've got to have 3,000 or 4,000 shares of something like this, which is, multiple over $100,000 position. And, that ties up your buying power just to make $10,000 over the course of a couple of months. I mean, I could do more than that by trading something cheaper and something that has less float that moves more. So it's not that I don't like the chart. It actually is right on a support level. But I think if you trade this, you got to go into it expecting that you're going to have to hold it for a couple of months for not that big of a gain. So if you're okay with that and you're just looking for something to throw your money into and forget about it for a couple of months, then this will work perfectly. But I wouldn't personally do it just because it's not my style of stock. So there's GlaxoSmith. Next up, CRISPR. So this is an IPO. And I have not really looked too much into the fundamentals on this, so I'm not sure. It's tough to value IPOs, you know, if you're not a banker or a financial analyst, which I am not. So, you know, for me, I mean, it looks okay. It took out its IPO highs. So it looks like that maybe 1850 area was pretty significant. So I guess if it holds above that, then we might get another push upwards. The only other problem with this one is it's a little bit thin. It had really nice volume on its first day. And if I remember right, I think the IPO price was like $14 on this thing. Yeah, CRISPR Therapeutics prices IPO of 4 million shares at $14 a share. So it's a relatively, you know, it's already up from the IPO price, which was 14 to over 20, you know, so it's already up 25 or 30% off the IPO price. That doesn't mean that it can't go higher, of course, but, you know, it's a little bit thin and it's kind of up a bunch already. I would definitely just want to see it tighten up. Right now it's got like a $4 range, which is too much for me. I'd want to see it tighten and, you know, get into some smaller candles like these ones over here. So you can watch it for a few days. I think maybe if it holds above 19 or $20 and just kind of goes sideways, we might get another candlestick like this. Only problem is that it's just a little bit thin, so you can't get a ton of shares of it, you know, on this day. Even though it looks like a big candlestick, it only did 192,000 shares, so it's not really like very liquid. So I like it. I probably wouldn't trade it personally just because it's not liquid enough. But it definitely has sort of a little uptrend going here. We don't have a ton of data to back it up, but I would say if it holds this uptrend, then it's probably in good shape for a little bit, at least a retest of these highs up at 24. Next ticker, Wells Fargo, Trivian, and then Cisco. So Wells Fargo, and then Cisco. So Wells Fargo is similar to GlaxoSmithKline, where it's just got tons and tons of shares in the float. And so for me, this is probably a no-go just because of that. But if you like stocks that move a little bit slower, this is going to be okay. It does have a decent flag forming. It's a little bit sloppy at the moment, but it seems like that 53 level, if we look at like the 5-minute chart, it seems like that 53 level is becoming pretty significant. Let's even go to like a 15-minute. Yeah, so this 53 spot seems to be pretty significant for it. So I think if it breaks above that, you might get a little pop back up towards 54. But, you know, the question is, a $50 stock, is it really worth making $1 a share on? For me, you know, I could find a $1 stock or a $10 stock that goes up 20 or 30%, whereas this one, you know, is only going to go up 2 or 3%. So for me, it's kind of a waste of buying power to trade something like this. But the pattern is nice. Looks like it could retest the highs here at 54. I think if it gets above that, then maybe up into the sort of the middle of this range, where we had like all this chopping around 55. Seems like this 55 was sort of like an oscillation point for it. So I would think if it gets over 54, next spot would be 55. And that's pretty typical of most of these types of stocks. They're going to run 53 to 53.50, and then 53.50 to 54, and then 54 to 55, and so on and so forth. So just keep that in mind. You know, it's low risk enough, I think, that you can buy it on this pattern. You know, you risk 20 or 30 cents. You know, so you want to risk $200 or $300, you know, you buy 1,000 shares or 1,500 shares. But again, it's a $50 stock. So you're talking about $50,000 to $75,000 of buying power tied up to really only make, $500 or $600 or maybe $1,000 at the most. So to me, that's not really worth it. I think there's better uses of my money. Next one, Trevina. That was the next one, right? Yeah. So this is a long. No, I do not like this long. Not at all. This is the long was down here. After this thing sells off for like 7 or 8 or 9 days in a row and then kind of starts to go sideways, it developed a little settling pattern here where it had a reversal candle and then went sideways and held that low and then pushed above it. And so, this was the long here. Now, you kind of just came right back up into that huge resistance. And so now, the move is over at this point. So it's going to definitely need to go, even if it's going to continue higher, it's going to need to go sideways for quite a while before it can get back over 650, I think. And even if it does get over 650, it's probably going to get stopped by the 200-day moving average here at $7. So I don't like this for a long at all. I think this is, if anything, it's a short. Temporarily. If you look at the long-term trend, this is really just testing that big downtrend. So, now does this still look like a long when we look at it this way? Because to me, this looks like a pretty obvious short sale. So don't like that one for a long, but I sort of like it for a short. All right, next up, Cisco, and then Mimic. All right, so here's Cisco. Cisco's another high float stock. 5 billion shares in the float. All of these well-known names, Apple, Cisco, Microsoft, Facebook, Google, they're all, for the most part, high float stocks, which means they're going to move slowly and they're going to require a lot of buying power in order to get anything out of them. So for me, I don't like trading stuff like this. I tend to stick under 100 million shares float. So if you're looking for ideas, that's a good way to filter them. Just look for the stuff that's low float. If you're not experienced enough to trade the real low float stocks that are under 100 million shares, then go like 100 to 500 million or something along those lines. When you get over 1 billion shares float, there's just too much supply for these things to move a lot. It would require Cisco to trade 1 billion shares or more in a single day in order to make a big move, which is just not really going to happen. Also, I don't really see any pattern here. This just looks like a big gap down, and there's not really any pattern on it. It's a very sloppy uptrend, I guess. So if we look at like a weekly chart, this might be okay for like a long-term trade, but really, it just seems like it's been stuck here for years. So yeah, there's fluctuations here and there, but just not a good momentum stock. It's not a stock that makes big moves. So for me, this is a no-go. And next up, how many are we at here? 1, 2, 3, 4, 5, 6, 7, 8, 9. So we got one more after Midic. So MyTech Systems. Long. What kind of company is this, by the way? Application software. So the NASDAQ has been getting smacked pretty hard lately. If we look at like QQQ, not QQQ. I guess it's sort of recovered a little bit, but it was getting, hammered pretty good over here. I guess it's sort of started to settle into the previous range with the S&P 500 now being at highs. But, the NASDAQ was getting hammered pretty good. So all these tech stocks like Facebook, Amazon, Google, Netflix, they were all getting slaughtered during this period, and I thought maybe MyTech might have something to, might be in that same realm, but it looks like it kind of took its heat, and now it's trying to bounce a little bit. So see if there's any news here. Ranked among the fastest growing companies in North America by Deloitte. Okay. Whoop-de-doo. There's a lot of fastest growing companies in America. So let's just look at the chart. The problem with MyTech right now, in my opinion, is that, first of all, the trend line is here. You have a previous breakout from $4. So tap, 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 tap. Finally breaks out, retests it, and goes on a big run. Tries to maintain an uptrend. Tries to hold over the 200-day moving average, and just kind of flopped right back through it. So now, I mean, it's definitely beaten down to the point where if you want to buy it at 550 and set a stop loss at 350, you can do that. But that means that you've got to make, what, 550, 750, 950, 1150. That means you've got to make $6 a share in order to really make it worth it, which would put this at 1150. And so if you think this can go to 1150, then go for it. But it's going to take you a long time to get there, in my opinion. I don't personally see any real pattern in this. There's no momentum in it. It's just kind of drifting lower. So for me, that would definitely be a no-go for the long. I don't like to try to pick bottoms. I like to try to trade stuff that already has momentum or stuff that has recently been really destroyed, like this DVAX. You know, Dynavax had bad clinical trial results or whatever the news was that gapped it from $12 down to $3. They lose 75 or 80% of their value, and now we can see that it's starting to put in a pretty clear resistance level around 475, 480. So when it comes over 480 and gets into this gap, it's going to go real quickly towards $6, 650, 675, and so on and so forth. It's got that momentum already, and everybody's just waiting for it to get into that gap. So those are the kinds of trades that I usually look for, especially if I'm picking bottoms. MyTech, there's no pattern, right? It's just kind of average volume, average pattern. It's just drifting lower. Maybe when it gets down to $4, has a big sell-off, you know, then you're on at least some significant support because you've got this rising trend line from here plus the previous breakout level at 4. So maybe at that point it might make a good buy if you're willing to hold it for a while, but for right now I'd say negative. And last one, Oracle. Oracle's sort of similar to the other stuff that we've talked about. By the way, if it seems like I'm shooting down a lot of these ideas, it's because I am. I'm a very picky trader. I don't like trading stuff unless I'm really, really excited about it. So I want to be in something that has a lot of momentum. I want to be in something that everybody else is also interested in, because that's what's going to make the stock move. You're trading something like Oracle. The only thing you're really trading against is high-frequency traders, hedge funds, and people that have way more money than you. So that's not going to make a good trade for the average trader. You know, if you want gains that outsize the market, you've got to have stocks that make outsized moves. And so we look at these shipping stocks like NMM went from $1.20 to $3 in 5 or 6 days. MTW went from 350 to 550 in just a few days. Now it's flagging. It's going sideways. It's got this perfectly flat top here at 535. When it comes over that 535, it's most likely going to go straight to the 200-day moving average. So is it a big gain? Not really, right? 70 cents, 65 or 70 cents, but you know, the stock's only $5. So you can buy 10,000 shares of it. So it's cheaper. DVAX got that momentum from the bad news. CXRX, same thing. Just recently, went from a low of 169 to a high of 350 in 4 days. Now it's moving sideways and it's flagging under that 350 level. So when it comes back over 350, we already know that it's got momentum. It's just consolidating. It's just people taking those profits from the people who bought it at $1.70 or $1.75 and it ran to 350 in 3 days. Now it's moving sideways because those people are selling. Once it works out those sellers, you're going to get another run. So Oracle, don't like it. There's no pattern. It's just kind of sitting here. It's just going sideways. And it's most likely going to continue doing that. So I would not personally trade this. Hopefully that gives you some ideas about the stuff that I would trade, though. Carbolan Therapeutics, this was another one. On Friday, this has still got some momentum left in it. Over 62 cents. We had all of these, all of these highs, 64.97, 65, 65. Once it came over 62 or 63 and everybody realized it was going for that 65 breakout, look at the volume that came into it. It was just an exodus of all the shorts, and all the technical traders like me, buy this thing at 60 cents and add to it at 62, add to it at 63, and within 20 or 30 minutes, it's at 72 cents. And so now we have all of these highs back here, 71, 71, 71. Once it gets above those, you've got 74.50 and then 82. So Monday, my guess, either Monday or Tuesday, as this thing takes out the high from Friday, we take out this 72 area, and then off we go, up to 75, up to 82. Above 82, where's the next major resistance spot? It's going to be this high at $1.29. So this can easily run to $1, $1.25, $1.30. It's made runs like that in the past. Look over here. It broke out over 82 cents, 82.5 cents, ran from 82.5 to $1.08 in 1 day, then consolidated for 2 days, and then trended up for 2 weeks up to $1.43. So it's proven in the past that it can do that. When's the last time you saw Oracle make the equivalent of a 100% move? Because that's what CBYL did. That's what CXRX did. That's what MTW did from 350 to 550. That's almost not a double, but it's a huge gain. It's not a 4 or 5% move like on Oracle. So anyway, those are the top 10. There are some other ones here that caught my eye just because I already know the stocks. Eames. And why is my linker not working here? There we go. So this is, I don't know, I don't really like it right now, but I know that this stock is a runner. If you look at FinViz for it, it's only 22 million shares float. So that's why it does stuff like this. Back here in June, when the stock went from $4 to $12 in like 4 days, that's because of this low float. It's because of the high short interest. So when this thing gets on a run, you don't need to catch the bottom of it, right? You don't need to pick the bottom right now. Just let it get some momentum. It's got some volume. It did pick up some nice volume on Friday for whatever reason. I haven't looked at the news, but it did pick up some nice volume on Friday. So it has that going for it, but it needs a pattern now, right? Right now it's just kind of running into this previous resistance here. So it kind of broke underneath that. Now it's running back into it. If it can get above like $12 maybe, then you might have a trade. But until it gets to that point, you just got to watch it. So anyway, let's leave it at that for today. If you did want to, if you had a question about a chart that I didn't get to, just post it in the comments section on the YouTube video, and I'll try to get to it via text. Also, if you haven't signed up for it, I do have a free newsletter. You can sign up at greenbartrading.com/newsletter, and I'll just throw that in the description also. I usually do. So I'll send out like 4 or 5 ideas twice a week for stuff that I'm watching and stuff that I've been trading, and like NVIDIA was on there, DVAX was on there, Civil was on there, AMD has been on there several times. So it's stuff that I've been trading and watching, stuff that's got some momentum. These shipper shorts like DCIX. DCIX was on the newsletter at like $20, and so we shorted it there. But it's just something I do for free just to get my own ideas out there and keep my skills sharp, and also share ideas with other people. So if you are interested in that, go ahead and sign up for it, and then I'll throw a link to my blog and all that other stuff on the description as well. So if you have any questions, hit me up. Till next week, peace out, guys.